Welcome to the CodCast. I'm Chris.
Hi, welcome to the CodCast. I'm Kudzai. So, Chris, it's been a while between CodCasts. What's been going on in the world of Coda?
Right, yeah, two reasons for it being a while. The first is I took some annual leave for the first time since Christmas. So I went to LA for a few nights and pretended to be a movie star in Austin.
Yep.
Went to Austin City Limits, which was great, and saw an old uni friend. So I've been away for about 10 days. But also, we've been in the entitlements offer period. Now, for those of you not familiar with sort of ASIC, the Corps Act regulated documents, effectively during this period, you do kind of have to keep a low profile and make sure that the market is fully informed, that there's no information which isn't in the prospectus. And that does kind of mean staying away from social media a bit as well. So we thought it was an opportune moment to take a break. Funny enough, the first ever podcast we did was straight after doing a placement. Bit of a different format, wasn't it, this one?
Oh, yes, definitely. $5.1 million in the bank. It's been a frantic couple of weeks
Yeah.
and a very different format of raise or way to raise money.
Very different.
We went with an underwritten entitlement offer this time, and due to the level of participation in the entitlement offer, we ended up putting a placement to take the over subscriptions.
Yes.
So I guess it's probably a good segue to go into informing our viewers as to why we took this particular approach, and I guess your take on how successful
Yeah.
or your views on this particular approach that we took.
Absolutely. I mean, the first is I mean, I've been running to public companies for 10 years, and I think this is the first time I've done a raise this way. Obviously, done SPPs, placements, various forms of offer, but this is the first in this way, which is effectively going out with the underwriting locked away, but then offering it to shareholders as first priority. And I know that one of the things that always I think is a challenge with placements is the drag that an SPP can be on your share price for a long period afterwards. I also know that it can be very unpopular with shareholders who aren't or don't qualify under the sort of Corps Act under what's called an S708 investor. So effectively people that can buy securities without any additional disclosure. And it doesn't sit well with me when that isn't offered to everyone. Our shareholders are our shareholders, and it really is important to include them. So this is the first time we've gone with this format. It's a format that seems to be very popular with Cumulus Wealth, our broker. And I like it. I mean, it's the hardest way to raise money as far as management goes. The amount of disclosure, the process has been brutal. I mean, we lost a couple of weekends and a public holiday on top of lots of late nights. But what's your sort of feeling about the way we've gone about this one?
I guess the truth is in the pudding. With the announcement that our viewers would have seen this morning, over 550 existing shareholders
Yeah.
participating in the entitlement offer is a very strong outcome.
It was over 550.
Over 550 existing shareholders, so that shows a lot of support from our existing shareholders, and raising $3 million from existing shareholders is a very good outcome.
Absolutely. And first point is thank you. Like genuinely thank you for your support. It means an enormous amount.
Yes, definitely. And I guess in sort of your view, taking a placement after the entitlement offer, what does that what sort of messaging does that say to you in terms of the sort of general market perception of Coda and what they think of the story?
Yeah, look, the first thing I think it's worth saying is I hate capital raising. It's one of the hardest things we do. Not only is it challenging because there's an enormous amount of compliance, enormous amount of work. Absolutely no issue with working, as you know.
Yep.
Happy to do the work, but it's emotive. It's difficult. No one ever wants to do anything that's dilutive. But it comes down to what is the money being used for and in what kind of market are you operating. The first, we have undertaken a placement of just over $2 million, which is effectively what was underwritten. So you go out, it's underwritten, but shareholders have first right of that. With the way that this was oversubscribed, there wasn't a single dollar left for sort of new supportive clients of Cumulus Wealth, and shareholders, which we believe will form a long-term support and provide that strength for the register. Ultimately, you want people who will talk the stock, who will go out and promote the stock and will support you in the longer term as well. The polar opposite of what we call fast money, which we try and avoid at all times. And so we have elected to take some of the additional funds offered, This is probably the first time in a very long time that I've had a harder job explaining why people can't have their
Mm,
allocation and can't have what they want rather than the other way around.
mm.
And that's a great position to be in. I think it shows some confidence in the assets, and I'd like to think shows support for our strategy.
Oh, definitely, especially in this current sort of market environment, raising capital is a bit of a hard task, and so this is a great outcome
Absolutely.
for the company.
Thoughts on Cumulus? I mean, Cumulus new brokers working with those guys.
It's always an interesting task starting to work with new
Mm,
brokers and
yeah,
trying to work out, where they sort of lie. And this has been a fantastic experience, a great model,
brilliant.
a great bunch of people to work with, and a
Yeah.
great outcome. So this has been a very good capital raising. That's correct. So with after the capital raising costs approximately 6.7 million in the bank, what are the next steps? What does the future for Coda look like?
It's exciting to be able to be doing real work. We've been doing some really important work over the last few months that has primarily been lab based. Uh, there are two big levers you can pull with this project, really. And I mean, this applies to many projects, but
Yeah.
particularly Elizabeth Creek. You can improve the copper recoveries because there is scope to improve. And we have demonstrated to date that they're improving, and we are advancing on that work. It's not quite done, but we are advancing on it. And the second is really improve the resource, increase the resources. There's two places to look down south. Um, we picked up new tenure, so about 70 square kilometres of tenure at Oakton. That's just sort of abutting the southern, previously what was the southern boundary of the tenure. So that's extended the tenure to the south, but still contiguous with the overall Elizabeth Creek tenure. They're open pit targets. Great thing about open pits are that they're relatively, well, they should be relatively lower cost to mine. They're relatively more accessible. At Elizabeth Creek, they tend to be smaller, relatively high grade. I think, you know, Windabouts in the sort of production targets about 1% primary copper. MG14 is about 1.4. So if you're finding open pits over 1% primary copper, that's without the cobalt, you're doing really well. So we've got several targets for that. We've just been through them. We've been ranking them. We've been looking at how easy they are to access, what steps are needed to be taken, and we'll be moving on that relatively soon. Last thing I said to Matt this afternoon was get on with it. The second area, of course, is ME East. So that's up at ME Bluff. These are underground targets. ME East is, we've done as much as we can do now. We've done 3, maybe 4 types of geophysics. But the ME East is really validated by MT and ANT, significant amount of targeting there. It's been in our presentation for a while. We want to go and drill that now. And so we'll start making the next preparatory steps to get that done. Of course, there's finishing off the study. There's always an eye roll with the study, right?
Another study update.
Yeah, yeah. Look, I get that. I get the emails. Occasionally, I see the social media comments, and again, it is a bit painful, but there's a reason to it, which is as it expects you to put out information which is complete and all accessible and all in the same place. The footnoting on these things is mind blowing, as is the verification, right? Poor Katrina spends hours and hours and hours doing
A
this.
lot of work. Yeah.
And so you can't just turn around and say, hey, we've done this. This is the new MPV, because it's not legally possible. So I'm sorry for the continuous updates. The alternative would be either not doing them, which would be a terrible idea, or going radio silent for months and months and months and then saying, ta-da, here's a bunch of work. So I would rather do it incrementally. I'd rather do it the way we're doing it. I don't think there's a better option. So those are the two big levers you pull, and we're pulling both of them.
Mm. So it looks like 2025 is going to be a very exciting year for Coda. Lots of work streams underway and a lot of work being conducted, and it sounds like back to drilling.
There will be some drilling in the very near future. Obviously, you don't click your fingers and get drilling. You've got environmental approvals, heritage approvals. Most of our areas are actually reasonably well cleared, well understood, and in some cases already subject to existing peppers. So quicker than they might be, but there's still a bit of work to be done there. So we'll be drilling very soon. Study update coming soon. Some work at Kinloch as well. We'll certainly be looking at the prospectivity of that, and that's interesting to us. That's the area in the Southern Murray where we've got this sort of, it's not a joint venture, but we own the tenements jointly with Boss Energy. And yeah, as you say, exciting. When you raise money, you have a responsibility to shareholders to do value accretive work. And we have put enormous amounts of time, effort, and planning into this. You've been part of this whole process, right?
Yeah, that's great.
It's a burden that sits heavy on my shoulders, yours too.
Yep.
You know, you raise money, people transfer their hard-earned funds into the company's account. I see so much cynicism these days, whether it's on podcasts like Money of Mine or our favorite Hot Copper or, various areas. But the reality is, I think management teams, certainly this management team, working very hard to do the best that we can with this asset, do the best that we can with this money. I think this is important money. I think this is money that's going to really help move the needle. And so we are looking forward to getting back to work, not least because I love doing study work and I hate raising, but it is important to do. So thank you again for your support. It is something that we don't take lightly.
Yeah, definitely. So as you mentioned before, capital raising is a very difficult thing and can be a tough time. But when you have an outcome like the outcome we've just had here for Coda, it feels fantastic. So this is a great way to end a capital raising.
Really is. Yeah. Excellent. And thank you, everyone.
Thank you. Thank you very much.
Thanks. We'll get back to work.